Hi again. Now that we have an understanding of risk and ownership, we have enough fundamentals to start our discussion of asset classes. Today we start on one of the most important ones, stocks. Now when one starts a business, there are many crucial details to consider. It all starts with an idea or a commercial purpose. While in some cases the founders may be merely copying the good idea of an existing business with the intention of offering a superior product in terms of functionality and or better pricing for the consumer, more often new companies try to distinguish themselves with their own innovative products and genius. Offering an improved product is easier said than done because many tend to exaggerate the improvements and the benefits of their ideas, as well as underestimating the cost of implementing them. But the germ of the idea starts with someone focusing on a product or a service that is both useful and affordable. Products don't have to be useful to everyone, as they may have a captive audience. You will have products for men, women, children, married women, grandmothers, and other classes, but when the product is not for everyone and the captive audience is limited, the use and support for such a product must be particularly robust in that target audience. Affordable is clearly important because if your neat, innovative product is priced out of the range of most in the target audience, then either you will have to price the product so high to be very profitable per sale and not sell very many, or you have to modify the product in some way to make the product more affordable to the class to whom it is designed to appeal. In any case, once products are proposed, an adequate cost analysis is done and determines that an affordable and profitable product can be offered. We have to address the issue of funding the venture. In some cases, the owners themselves will have enough personal money to start the business. But almost everyone who starts a business understates the amount of money necessary to do so, the so-called initial cost. Often it is hard to anticipate the myriad of costs necessary to start a business. We may find more things that we have not planned for, and we also find that there are things that cost more than we had planned for. We might discover that we need more funding, more capital. So we will look to bring in more partners, reliable partners, who will contribute to the financing of the company. But we must be careful that their future role in the company is not destructive. In fact, we might bring in many partners. So a big purpose of bringing in more partners is to increase funding, sometimes called equity capital, to start the company. And then to run the company, it is very important to understand that there are not only startup costs, but there are costs to run the business on an everyday, ongoing basis. And we need funding for both, especially since there is some time before a new business has profits. Finally, we must choose our partners carefully, as there are certain rights such partners have, and so we must be sensitive to compatibility. Just because a potential partner can contribute capital does not necessarily make that partner a good fit for the company. To be continued. Thank you.